the time being, let's shift the spotlight to the IT sector. Like we've been telling you, the IT sector has been the best performer of November. This index has galloped about 7.5% in a month where the Nifty has more or less been very, very range bound. And that run continued last week and on Friday as well. For the year as a whole, let's pull the one-year picture. It's been a stellar ride, almost 20% plus on the IT index. Now, has the Trump news given the IT index a fresh lease of life? Can there be sort of more upsides ahead? Let's get that going with Apurva Prasad, who looks at the IT space very, very closely. He's from HDFC Securities. Apurva, good morning. Great to have you on. And that's the real question, right? The dollar keeps rallying, which, at a very fundamental level, intrinsically is good news for these exporters. But the bigger issue is that is it better business times ahead? As President Trump is expected to be inflationary, a lot of US companies, US-facing domestic companies are doing really well. What's your sense?
Yeah, it certainly seems that better business times are ahead. And I say that because there's been a lot of pent-up demand that could start to get released. So we do expect growth to accelerate. We've been saying that it's bottomed out about 2 quarters back or so. So we are somewhere about mid of that recovery, and in about 2 to 3 quarters, this growth should get back to normalized level of high single digits. So that's the trajectory that we're looking at. Having said that, even if you look at from a profit growth standpoint relative to the market, where you see the overall benchmark earnings growth is receding, you're seeing IT sector move from mid-single digit earnings growth towards high single digit, which is where it's already achieved that in the second quarter. So I think the relative case is there, the growth acceleration, and I think a greater certainty of this happening. And case in point being is that this is happening despite any mega deals. So there is a lot of discretionary spend. I think that's helping growth improve from here.
But Apurva, the question is, isn't a lot of this already baked into prices? Look at this year. Forget the November rally. This year, the Nifty is up about 12%. The IT index is up 22% in just the calendar year. So isn't the whole hope of this turnaround, higher earnings, isn't much of that already in the price?
Yeah, so yes and no. I mean, look, in times of uncertainty, you also pay a larger premium for defense. But at the same time, you're right that there's an amount of re-rating that has happened in anticipation of that. Having said that, yeah, we do believe that returns from here is going to be sort of more a function of earnings growth. So within the bigger ones, for example, we expect one-year returns between 5 to 15%. So it's going to be modest returns after this re-rating that we've seen.
5 to 15%, Apurva, you've got around 7% on the index in last 1 month. So building on that as well would not be such a bad outcome, because in a month or so, I think there's a big outperformance. Apurva, according to you, Trump is good or bad for tech? Because you don't know which side of the bed he's going to get up on. But, earlier there were problems with regard to the H-1B visas, which broadly, I think the IT companies have adjusted to. But some part of the street is making this argument, that there are going to be tax cuts, so high amount of spending on tech and more on the services side. The other argument is that the dollar is likely to be stronger, which invariably is good for the tech space. So which side of the argument are you on?
Yes, I think it's going to be positive. It looks at the outset, it looks certainly to be like that, Nigel. Look, the reasons that impacted the sector previous time Trump was in, those reasons are not there right now. So supply side H-1B related factors, those are unlikely to be risks in the current scenario. Having said that, a lot of policies is directing towards a higher inflationary environment, which also tends to be more positive from a cost optimization point of view for the IT sector. Plus, you're looking at the overall enterprise revenue growth trends that are accelerating. So you look at the S&P 500 across different industry segments, you see an uptick there for CY25. So I think that's a positive. You look at tech job postings number, I think it's been improving over the past 2 to 3 months or so. So I would say there are some positive indicators coming out of the uncertainty part, which seems to be behind. Having said that, we'll have to see how each vertical plays out. For the time being, it's fair to say that BFSI, which is the biggest vertical, I think that's certainly doing a lot better. You look at the weakest player, you look at the strongest player, and I think it's pretty similar to what's happening in that. So I think that's certainly doing well. I think high tech is another sector which is doing well. So you've got 50 to 55% of the business for the companies is doing a lot better than, let's say, where it was a couple of quarters back. There are some segments that have slipped. So parts of manufacturing within the automotive, some challenges there. But net it looks to be positive.
Yeah, no, I mean, look at the BFSI stocks in the US, Citi, BofA, JPM. In the 3 weeks since Trump has come to power, these stocks are up. I mean, I think they've done better in the last 3 weeks as compared to what they've done in the rest of the year. So that optimism certainly is there. The question, though, also, I think, to my mind, I don't know if you agree with it, the bigger question is not if Trump is good for IT or not. It's whether AI is good for IT, Indian IT services or not. And there, I think the answer is still very muddled, right? We don't have answers in that sense.
Prashant, I would say it's a lot less modern. I think the concerns were a lot more, perhaps 6 to 9 months back. I think what we've seen over the past few quarters, and there are companies that have started to report a lot more information around what Gen AI and AI is doing to their business. It seems to be net positive. So you're seeing increase in headcount as well as a lot of incremental growth coming in from AI. I think that's a great sign. So I think that certainly has reduced some of the terminal growth related risks for the sector, I would say, which is partially the reason why there has been some re-rating. And second, I would say a pocket which has been competition for the sector is what has been happening on the GCC side. So we believe that the growth differential between the captives and IT sector, that's probably at peak levels now. So over time, that should expect to sort of come off and that converge. So I think those two are some of the more medium-term related risks, which look a lot lower. Now I think AI, there are enough use cases that IT services companies are participating in. The conversions are improving from POCs to programs, as well as, like I mentioned earlier, a big part of incremental growth is driven by AI. I think these are certainly good signs.
Okay, all right. Apurva, we'll leave it there. Thank you very much for joining us. Appreciate your time here on CNBC TV 18. 3 minutes.